Well, happy Tuesday to you. I'm Marlon Bowling, your ag commodity tour advisor here. And let's take a look at the markets with Brian Hoops. Let's welcome him to the program here. He's with Midwest Market Solutions, and he's based in Springfield, Missouri, where you guys have had a fair amount of rain here recently. Looks like maybe a potential for more severe weather into the plains again. And we got some USDA numbers yesterday that are leaving a lot of questions after they showed corn at 92% planted nationwide, and the trade just doesn't seem to really know for sure what to do with that. And I have to agree, I'm one of them. 92%, we really don't know what that means. 92% of what, Brian?
Yeah, that's probably why we're not seeing a big movement in this market. It's trying to determine what does that exactly mean and how many acres is that, but it does imply that there's about 7.8 million acres that are still left to be planted based off the USDA report from last March. Normally, we should only have about 1 million acres left, so we are well behind normal pace, at least 6.7, 6.8 million acres well behind where we're at. And the trade should probably anticipate that most of that is going to go into preventive plant. There won't be a lot of corn planting going on over the next several weeks. And conversely, with soybeans, we're about 77% done there. So that leaves almost 20 million acres of soybeans to be planted. Normally, we should only have about 6.5 million acres left to be seeded at this time. So, our planting is well behind normal. Trade is assuming we are going to take a lot of corn into preventive planting, and that may or may not show up in the quarterly stocks and acreage report. That report's as of June 1, so we may still not have all the answers even after that report is released.
Well, that's all well and good, but my question to you is, when do we find out what the total of what I call failed acres is? Do we find out next January or what?
Yeah, it'll take some time. Each August, starting in August, the FSA offices report how many acres have actually been prevented planting. We won't really know how many have been abandoned other than that until we get into the harvest time frame. So it's going to be some time before we have all the answers. But the market's job between now and then is, for soybeans anyway, to try and keep a premium in there to get farmers to plant those remaining 20 million acres, as we don't want them to go into prevent plant as well. So probably very limited risk in the soybean market over the next couple of weeks until we get those acres planted, or at least see a forecast that would allow us to be confident that those acres are going to be seeded. Corn's probably going to take more of a backseat followers role to the soybeans.
And of course, what I'm talking about is a whole different bucket of acres here. I mean, prevented plant is one thing where you just don't even plant, but I'm talking about the ones that are planted and emerged and then they flood out or something. And I don't even see a category for them, and that could be a significant number too this year. Let's go ahead and take a look at our prices here. On the corn market right now, we are well off our earlier lows from last night. On July corn, we are now 1 1/4 penny higher at $4.56. In December, just 1 1/4 penny lower now at $4.67 1/4. Things really quieted down. Soybeans have turned higher, and we have the July contract now trading 3 3/4 higher at $9.16 1/2. Now, in the wheat, they're still lower at the three exchanges here. We have July Chicago wheat down 4 1/4 at $5.35 1/4. Kansas City on July, it's now trading at $4.68 1/2. That is down 7. And in the Minneapolis spring wheat trade, you currently have the July contract there trading 2 1/4 lower at $5.58. We'll come back and talk more with Brian Hoops about our livestock trade when we return right after this. We're back with our conversation with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. And let's take a look at our livestock trade with the turn higher in some of the feed grain markets this morning. Let's take a look at what's going on in the cattle. On live cattle, we now have the August contract quoted at 105.80. That is up 17 cents on the day. And now you have the October up 52 at 107.22. I'll point out the deferreds are stronger than the nearbys here. That's not necessarily considered a bullish sign when that happens. Let's take a look at our feeder cattle market. On the feeders, we now have the August up 52 at 137.45, and you have the September 65 higher at 137.82. The gains are more consistent across the table here on the feeders. On the lean hog trade so far today, we have the August now 13 higher at 82.38. Down quite a bit from our earlier trade. We have October 60 higher now at 77.38. All right, Brian, what's going on in the livestock markets here this morning? They're hanging on to small gains anyway, at least on the cattle side. Is that considered a minor victory or what?
Yeah, probably the case. They did get a little bit of a bounce into the close on Monday. Show list numbers that came out were up from last week, but about 30,000 head less than a year ago. And so there's a lot of thought that maybe we're turning the corner here on the cash markets. The feeling is the futures have made their summer lows, anticipating demand would improve going into the summer in the heart of the grilling season. Meanwhile, the cash market's still searching for that low. Cattle on feed that comes out on Friday should be pretty friendly, I think, to some of those deferred contracts of the live cattle, the October, December, and further on back months. I think we're going to see, smaller placement numbers, and the market should be anticipating that'll be a friendly move for this market as well.
Now, why do you think that'll be the case?
I just don't think that the feedlots, they've really been aggressively placing cattle during the last 2 months. So when we showed April, May placements, a much larger number than year-ago levels. This month, we've heard from feedlots they are not placing as many cattle into the feedlots. Some of them are going onto grass pastures and should be down from a year ago.
Plentiful grass, I keep hearing time and time again from all the abundant rain out in the plains this year. So thanks, Brian, for talking with us. Brian Hoops of Midwest Market Solutions. He is based right there in Springfield, Missouri, where it has been kind of wet lately. So anyway, we thank him for the update.
Absolutely. Pasture conditions looking good across the country.
Hey, it's been a while.
All right. Thank you. Appreciate that, Marlon.